global capital markets. A butterfly can bring a typhoon. You don't believe us? Well, if not a typhoon, a butterfly can surely cause an earthquake or a volcanic eruption. Seriously, guys, we are not joking. Okay, we know this may sound a little too obnoxious, but in theory, it is possible. Stay with us, and we will clarify it for you. Before we move forward in this chapter, have you heard about the butterfly effect? No, don't start Googling about it. It has a very uninteresting scientific definition, but the whole crux of the effect states that one small change somewhere can bring about a catastrophe somewhere else. The butterfly effect comes from the theory which suggests that a butterfly flapping its wings can become a cause for a volcanic eruption somewhere on the planet. Although the theory is inconclusive, what we are trying to stress is the fact that small changes or regulations can bring an entire change in the global capital markets. May it be the death of a global leader, a natural calamity, a financial crisis, or a recession, a pandemic, or a war between two nations. Each and every factor contributes to the fluctuating dynamics of the capital markets. This is because, at first, things may look separate. Still, everything is interlinked, and the whole global economy is nothing but a representation of global capital markets, including businesses, operations, trade activities, and everything. To have a clear understanding, let's view another table. As of the second quarter of 2023, the top world's major equity markets based on global market capitalization are. The rest of the market share and capitalization is shared by the UK, Australia, Canada, Singapore, and other developing and emerging markets and countries. As we already covered, the United States capital market owns more than 40% of the total global capital market share. Having said that, we come across another important insight. Goldman Sachs projects that the United States equity market capitalization will drop by 35% by 2030, and emerging markets, including India and China, will together reach the 35% mark as well. The Goldman Sachs projection also predicts the 2050 charts, which give us another interesting table. This chart leaves space for other emerging markets. The chart itself is an example of how the capital markets are growing with time and how much the world's financial development depends on the predictions and movement of the capital markets. Yes, the markets do open and close on weekdays, and yes, they are regulated by policies and trading laws. Still, every asset, whether it is currency, commodity, stock, bonds, or mutual fund, is important for growth. A recession or financial crisis not only weakens the market, but affects the global economy. History has been witness to many such stock market crashes, news, and natural occurrences that not only disrupted the international markets, but stayed for a long time, and in some markets, we are even struggling to fight and overcome its after effects.